Hey, Think Tank community. This is Brian here, one half of the Think Tank guys. And for this week's 52 Ways to Put Your Policy to Work project, hashtag 52 Ways project on Facebook and YouTube, I have an idea here that I've spoken with a handful of clients about. Interestingly enough, across the board, there is a concern that I'm going to talk about and address. But most importantly, this is an opportunity for families, especially when we have clients who have these policies who have adult children, or at least children who are in their, late teens, early 20s or so, if not older. There's ways that you can help your kids reduce their loan interest while you earn. Now, of course, while you earn is money inside of your policy that's working for you, and we can loan against that and lend to family members. Stick with me here, because some of you might be saying, ew. Interestingly enough, we're taught by Wall Street to put money in things that we don't even understand, but sometimes we eke about lending to family members. And listen, there's certainly reasons why. Sometimes you may never ever see that money again. However, there's ways to handle that, and there's ways to help your kids reduce their loan interest while you earn. So let me dive into this because it's effectively a win-win for everybody involved. Of course, you can do it off the cuff, but then there's potential problems with that. So if you are in the spot where your kids might be, your adult children especially, might be paying like high teens, like 19, 20, 22, 24% on credit cards they're carrying, and you have money either in your policy or even idle money outside, just look at what can happen over time. If I just put together a quick little loan calculator here. I don't know how big it's going to let me make this. I put together a little loan calculator here, and you can see that, if they're paying down, if their plan is to pay this thing down in 5 years, 60 months, and they pay the credit card company, they're going to be paying 16 grand in interest costs. Whereas if they're paying back to a family bank, even at 9%, they drop 10 grand off that interest cost there. It's down to $6,000 in interest cost. Now, where this can become powerful is if, they can't just go to a credit card company and say, can I have 9% instead of 22? I mean, you know that. So what they can do is they can come to you as the owner of the family bank, and you can either use a policy loan to create this, or you can use some idle cash, create this $25,000 loan to them. Set an interest rate at, say, in this example, 9%, and you notice that not only will you make money, but you'll be able to help them save money. Now, the challenge becomes, what ifs? We want to make sure they pay us back. We want to make sure this, we want to make sure that. Well, there's a couple ways around that, and one very interesting website that I actually plan on using at some point, but I also want my clients to know about this, and I want you guys in the Think Tank community to know this. You can easily go online and find a promissory note somewhere. And a promissory note is just a document that you can draft and sign and even have notarized if you want, that will kind of dictate the terms of that loan, so that if something happens where the loan's not being paid back, you have something enforceable. Plus, it guarantees clarification between the two parties, the dad and the kid, or the mom and the kid, or whatever. And you can find a promissory note online. There's two places in particular. One, you can go to NOLO. You probably Google around for them. I found an interesting website called LoanBack, which is basically like a loan form builder, which allows you to put these together. And it kind of talks about, there are different products there, and it's like $15 and $30. But the one that I see is the most intriguing, that I'm going to be exploring further, and I wanted to share with everybody out there in Think Tank land, is a website called National Family Mortgage, nationalfamilymortgage.com, where you can they understand that there's challenges to, I'll go back to the homepage. They understand that there's challenges to creating a loan like this among family members and friends and people that know each other. There could be gift tax issues. There could be relationship challenges. But there's also an opportunity to both, like I showed you just earlier, to save someone money and still earn money with your cash, and/or your cash that's sitting in the bank, or cash from your policy. So this website actually has services that are specifically designed Let me go to lend. If you want to lend to a family member, they can process the payments for you. There's a place for the family member to send the checks, and then both of you can get detailed monthly reports. There's IRS reporting on any type of interest owed, things of that nature. And you can see that if you want to become a lender and help a family member either purchase a home by financing a down payment, you want to help a family member refi a mortgage, do a home equity line, do a reverse mortgage, purchase a home, borrow home equity, whatever it is. And there's plenty of different reasons why to set this up. They have an application. They have documents to review and set up. They can register the documents. They can do management and IRS data. It's just really intriguing what they can do. Of course, they charge a small fee for all of this. But the fact of the matter is, if it becomes advantageous, maybe the borrower, let me just talk to my clients here. Maybe the borrower is the one that pays that fee, right? Because they're the ones that are effectively going to be saving $10,400 in interest in this example, right? So make sure you check that out if you're remotely interested in this or just curious about it. It's nationalfamilymortgage.com. And when we circle back to the purpose of this whole thing, helping family, because now you, as a client and as a think tank community member, you know that there's a place to store cash where it earns interest. And we can be more strategic about how we pay interest, especially when it comes to consumer loans and credit cards. Well, we can help our family members reduce their interest owed, earn interest for ourselves along the way, and it's a win-win. So with that being said, think tankers, here's to your prosperity. This is where mind and money actually start to explode because you realize that there's ways around the typical model, which is just let's borrow from credit card and the banks. Let's stick our money in unsafe places to try to chase returns. There's a lot more strategy to this. Any questions, make sure you ask Eric or I. And like I said, here's to your prosperity. See you next time.